Hello everybody. So I have updated this spreadsheet I'm working on for my Patreon, still under construction, but this is about comparing the Bitcoin proxies, the stocks that are proxies for Bitcoin and for Bitcoin accumulation, and kind of trying to figure out what should these stocks be valued at. How should we value them? Should we value them as a ratio of, say, the NAV, price to NAV, market cap to NAV? And then we ask the question, should these stocks trade at 2x NAV, 1.8x NAV for like a Marathon, or should they trade at 5x NAV or 7x NAV? And then you can get crazy and say they should trade at 15 or 20 NAV because Microsoft trades at 20 NAV. You could go there too, although I won't. Or should we trade them at a multiple of the yield? And then if you trade it at the multiple of the yield, when you look at the Bitcoin yield they've achieved for the past 12 months, trailing 12 months Bitcoin yield, and then you look at the market cap, so you divide the market cap by the yield, and you see these stocks are very cheap too if you do a market cap over Bitcoin yield, although not as cheap as if you do market cap over Bitcoin NAV. And but if you start to argue that these stocks should trade at a ratio of the Bitcoin yield, then you get into insane price targets. I mean, absolutely insane price targets, bunker stuff. So for MicroStrategy, if I say the stock of MicroStrategy should trade at 15 times the annual yield, so the annual yield of MicroStrategy, you can see MicroStrategy yielded 72.4% year to date, and I'm rounding it up. I'm rounding up the year to date as a trailing 12 months. Please grant me this, we're only 2 weeks from the end of the year. So if you say 72%, they generated a 33% yield in 2024. So they trade right now at 2.78, 2.7x, 2.7 times the Bitcoin yield, or 2 times MicroStrategy trades at 2.01 times the Bitcoin stack. Their Bitcoin NAV, net asset value, is 46 billion. They own 46 billion worth of Bitcoin, i.e. 439,000 Bitcoin. And so if they should trade at a multiple of Bitcoin yield, and we put kind of a market multiple, kind of a 15, you would say MicroStrategy could go to $2,000. And if you want to get even crazier and say that, well, they should trade at a 30 multiple, then you would get to a $4,000. So anyways, between $2,000 and $4,000 in my more optimistic targets, and in my less optimistic targets where you say, oh, well, it should really be trading at a multiple of NAV. So let's say the market gets a little more optimistic, then you say, okay, well, MicroStrategy could trade at a 5x NAV. Well, if it trades at a 5x NAV, we get very near to $1,000 a share, and right now it's trading at 386. So, and if you say it's 7x NAV, and then you can even argue higher. So again, these targets are not my targets. They are just standard way to value stocks using multiples, and many people, I'd say, historically, stocks are valued at multiples. And so this is a new industry. We don't know what the multiple is for this industry. Like we know big tech, a 30 PE multiple for big tech. We know that's pretty normal, right? We know a dying, failing company like an auto conglomerate, a 6 PE or a 5 PE or a 4 PE for a dying auto company is more normal. So PEs change based on industry. This is a new industry. No one has any idea what's the proper ratio that one should argue and what they should be trading at. It's new. It's risky. That's why this channel is just entertainment. Not investment advice ever on this channel, just entertainment, because it's risky. We don't know what they should trade at, but you get a comparison. So you get a comparison here. So let me compare to you really quickly. So MicroStrategy and Semler Scientific, they both have businesses that are unrelated to Bitcoin. MicroStrategy is a business intelligence private software company, independent, as Saylor calls it. It's not private, but it's an independent business intelligence company. The business is worth about $1 billion. Semler, they have quantified QuantaFlo. QuantaFlo is a device that replaces the arterial, bronchial, whatever, AT. It replaces an ancient test that doctors used to make in the 50s, they've been making to the 50s, and it's like a more accurate way of testing for some sort of heart disease. I can't remember what it is. Anyways, it's a medical device company. Not that interesting. No offense to Semler, by the way. I hope they don't blame me for that. But you know what I mean. What's exciting about Semler is Bitcoin. And so their medical device company is maybe about 200 million of that company. And the rest is about the Bitcoin yield, the Bitcoin strategy yield. MicroStrategy and Semler, they do the same strategy. They issue shares, they issue convertible debts, and they turn around and turn right back around and turn it into Bitcoin. And the key of generating the yield when you issue debt or issue a CB and turn it around into Bitcoin, the key is to dilute not as fast as you accrete. You dilute your shareholders only a portion of what you will accrete to your shareholders, and the difference is the yield. They're pure play Bitcoin yield strategies when it comes to MicroStrategy and Semler. They're pure play treasury strategies. Now, Mara is a hybrid. If you look at Mara, and I'm going to put RIOT now. RIOT just started being a hybrid. Mara and RIOT, they're hybrids. They do both. They do a little bit of mining. A lot of mining, really. They got started in mining. The main business is mining. And they started doing the Bitcoin yield proper strategy. And so when I look at Mara and RIOT, I come into the problem, well, how am I going to calculate that Bitcoin yield? What am I supposed to do? So this is how I did it. You can see it in my calculation right here. Mara's published year-to-date Bitcoin yield as calculated, like MicroStrategy does, like Semler does. Their Bitcoin yield published, it was 47%. And then I gotta come up for a yield of the Bitcoin mining. How much Bitcoin did they mine? So what I did is I took the last mining month, which was November. I multiplied it by 12 and divided it by the current mining bag. And that gave me, in the case of Mara, 26.9% yield. Why did I do it like that? Well, I'm fully aware that if the exahash, if the hashing stays the same, the difficulty is going to eat into these profits. And so that means that 6 months from now, maybe they only mine 700 or 650 Bitcoins. So the amount of Bitcoin they mine is going to go down. But these miners are augmenting their mining capacity. They're updating the rigs. They're putting more rigs all the times. So I'm just doing kind of, a quote-unquote stupid assumption. I'm assuming it stays flat. And I'm doing that for the sake of simplicity. Because yes, they will mine less, but also, yes, they will they will install many, many more miners. All of these miners have a huge ramp coming up of new miners. So the new miners come, but they mine less. So I'm assuming the mining is going to be flat. Maybe it's optimistic, maybe it's negative. I unfortunately don't have the time to go into the nitty-gritty. There's fully Bitcoin mining dedicated channels. I think Rex Finance is one of them. Highly recommend if you're interested in a dedicated channel to mining. For my assumption, I'm assuming it's flat. So I have a Bitcoin yield of 47% for Mara, and then I have a mining yield of 26%, looking at the mined Bitcoin divided by the bag. And so Mara, I add 47 plus 26. You see the Bitcoin yield that I get for Mara is a 74. And for RIOT, I do the same strategy for RIOT. Their published Bitcoin yield that they've done through the equity strategy, through the issuance of new financial instruments, so that's the 37%, and then I add 34%, which they mined on their own, which is 71%. And keep in mind that often these companies, these miners, they dilute to mine. You dilute the shares, you finance your expansion, your executives, and your electric bill. The electric bill is the biggest part of the cost. Most of the cost of mining Bitcoin is electricity. You finance all of that via dilution because it's much more tax efficient than to sell some of the Bitcoin you mined to pay for your expenses. That right there is not as tax efficient. So that's kind of how they do it. So I'm going to assume these yields are comparable. Assuming these yields are comparable, this is what we get. So we get, as far as a price to Bitcoin yield, a market cap to yield, we get the cheapest player is Mara. And if you saw my video on Mara 2 weeks ago, I called it the hybrid strategy. I find Mara quite cheap. I find it quite interesting. They have older miners, and so a lot of people are like, oh, well, we don't like the older miners. We want to invest in the lean and mean. CleanSpark was a newer miner, or even Iron, who doesn't Hodl, but they have the newest miners. Well, if you look at Mara's strategy, it actually makes sense for them to have older miners, because their strategy is to go to stranded electricity, where electricity is essentially cheap, free is what they mean by cheap, is essentially free. So they have a whole strategy about flare-ups, about using oil and gas flare-ups to power the miners at peaks of electricity to offset the grid. So they have their own strategy to expand the life of the miners, but the miners are not as new as Mara. And you can see that when you calculate the Bitcoin yield of Mara compared to even RIOT. It's got older stuff than RIOT, and especially CleanSpark. CleanSpark, keep in mind CleanSpark, that yield on CleanSpark of 80% is only via mining, only via those new miners. So CleanSpark has an amazing fleet. So anyways, when I look at the price to Bitcoin yield, so kind of maybe a novo PE ratio, a new way of thinking about these things, and of course, we're only talking about economic meanings here. This is not a gap accounting channel. This is not about that. This is about trying to figure out how to value these industries, trying to figure out what's the economic equivalent. The economic equivalent of a PE for a miner may be market cap to Bitcoin yield or price to yield. For example, if you follow REITs, REITs use adjusted funds from operation, AFFO. They don't use earnings because even though they report earnings, everybody knows you can't understand REITs via earnings. You got to understand them via AFFO. And so maybe we should understand miners and MicroStrategy and Semler and Bitcoin treasury companies. Maybe we should understand them via the price divided by Bitcoin yield, in which case Mara is the cheapest, MicroStrategy is the second cheapest, Semler is the third cheapest, RIOT is the fourth cheapest, and CleanSpark on that one alone would look expensive. And this is following the intuition that I think a lot of the crowd in this space is getting, which is mining is a whole lot of work for something that you can just buy. You can just go buy the Bitcoin. Mining it is much harder work than just buying it. And this is what Saylor and Semler have figured out, especially Saylor, and this is what Mara themselves have figured out. That's why Mara has been following that strategy so much, because it's like, okay, well, we work so hard to mine it, we might as well just buy it. And so that's what we're figuring out. That's why Mara looks so cheap on this one. And as far as Bitcoin as a percentage of market cap, this is what I call the built-in safety, or the built-in margin of safety, because I do not reasonably assume, at least within a bull market, and there's this whole question as to whether we're in a secular bull market for Bitcoin, or how bad is the bear really going to be? That's the big question. The new administration in the US will still be there when we're supposed to get the bear market. So what if we get a Bitcoin strategic reserve? Are we going to have the same bear markets? Are they going to mean the same thing? So if you were to assume, and this is no financial advice, but if you were to assume that these companies really, it's going to be a hard time for them to trade below NAV, below Bitcoin NAV, you think there's enough awareness today for these stocks to not trade below their Bitcoin on balance sheet, then you get that safety, that floor, in my view, at a 1x, and nothing is safe in this space. This is not a bond. This is stocks, right? No financial advice. But and this is where you get to this whole idea, right? And a lot of people in the community argue that 1.5, argue that we're gonna have a very hard time falling below 1.5 on a market cap to NAV, market cap to Bitcoin NAV. We're going to have a really hard time falling below 1.5. I agree with that. I think that is what some call, max pain. I think the max pain for any of these is going to be 1.5 NAV. Or look at it as Mara's stock. Mara's market cap is 53% Bitcoin. And MicroStrategy, as expensive as some folks think it is, it's almost 50% Bitcoin in the share of the market cap. So these companies I find interesting. Feel free to pause the video. I anticipate this is a video that's going to be paused, and you're going to be able to pause it and compare and look at the theoretical upside. This is all very theoretical stuff. One last thing I'll say is that all of these companies, relative to how much Bitcoin they've mined, and relative to a pseudo PE ratio, right, market cap to yield, and relative to a market cap to Bitcoin NAV, they've gotten cheaper. The last time I did this video, these were the ratios, and you can feel free to pause the video and look at the ratios the last time I did. These stocks on a market cap to Bitcoin NAV got cheaper recently. They've increased the yield, and they've gone up in value as well, but not as much as the yield has gone up. And so I see so much opportunity in this space right now. Anyways, this was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Follow me on X. Follow me on Patreon. I'm putting my spreadsheets on there, but I'm still working on them. It's a perpetual working process. But if you want to support me, I really appreciate the support. It takes quite a bit of time to do this channel, so I really appreciate whatever support you have for me. Thank you for watching, and have a wonderful day.